Hey everyone, welcome back. Apple just turned 50 years old, and Wall Street is asking one big question. Is Apple still worth your money in 2026? Right now, Apple is trading around $255 per share, down about 7 to 9% year to date, making it one of the rare years Apple is in the red. But here is the thing, the fundamentals are anything but weak. Q1 fiscal 2026 revenue came in at $143.8 billion, up 16% year over year. Earnings per share hit $2.84, a 19% jump. And Apple now has 2.5 billion active devices worldwide. Market cap, a staggering $3.74 trillion. Still one of the largest companies on Earth. So what's moving the stock right now? First, AI. Apple hired a former Google VP to lead Apple Intelligence marketing. Siri is getting a massive overhaul powered by Google Gemini, and possibly Anthropic Claude 2. WWDC 2026 in June is expected to unveil Apple Intelligence 2.0, a potential game changer. Second, the iPhone 18 production ramp is already underway for the second half of 2026. Morgan Stanley's latest survey shows a record 37% global iPhone upgrade intent. That is the highest they have ever recorded. Third, services revenue crossed $100 billion annually, growing faster than hardware. And a foldable iPhone? Bank of America supply chain checks confirm a fall 2026 launch. Now let's talk price targets, and there is a wide spread here. Wedbush Stan Ives, the most bullish on the street, has a $350 target. He calls 2026 Apple's true entry into the AI revolution. JP Morgan and Morgan Stanley both sit at $315, citing resilient margins and expanding services revenue. Goldman Sachs is at $320, pointing to strong App Store trends and balance sheet strength. Citi has a $330 target, raised recently on AI monetization potential. The street-wide consensus across 31 to 77 analysts, an average 12-month price target of $295 to $300, implying roughly 16 to 18% upside from current levels. The overall analyst rating? Strong buy. What about fair value? Apple currently trades at 29 to 32 times forward earnings, above its 10-year historical average of around 24x. That premium is the key debate. Bulls say the AI and services growth justify it. Bears point to slowing hardware innovation, DOJ antitrust headwinds, and tariff risk with China, where Apple still manufactures the vast majority of its iPhones. Next earnings drop April 30th, and Apple is guiding for 13 to 16% revenue growth. That is a big number. If they deliver, expect the stock to move. Bottom line, Apple is not cheap, but it is not broken either. If Apple Intelligence delivers at WWDC and iPhone 18 kicks off another upgrade cycle, the bull case to 315 or even 350 is very much alive. Hit like, subscribe, and drop a comment. Are you buying, holding, or selling Apple right now? See you in the next one. Disclaimer. This video is for educational and informational purposes only.